Hello, Professor Wade. This is just my video for the video exam that's due on 11/24. I wrote down all my answers on the rubric you gave us for the assignment, so it may seem like I'm reading, but I'm just reading from what I wrote down on the Word document. Okay. The existence assertion is the assertion that all account balances exist for assets, liabilities, and equities. This basically means that all reported values do indeed actually exist and weren't fabricated to make the company look as if it were in a better position than what they actually are. Next, the occurrence assertion is the assertion that recorded business transactions actually took place. This is pretty similar to the existence assertion. It just applies to transactions rather than assets and liabilities. It means that any reported sales or purchases were true and not made up to show the company in a better light, which, if that would happen, would be highly illegal. Next, we have the rights obligation, which I combined with the rights and the obligations assertion. Um, The assertion is that the entity has the rights to the assets it owns and is obligated under its reported liabilities. This means that if a company has one asset and one liability, they have to record both of them and not just record the asset and ignore the liability, since it has a negative effect on the company's general ledger. Next, we have the completeness assertion. So this is the assertion that all reported asset, liability, and equity balances have been fully reported. In other words, this just means that anything that's reported is completely reported and not just like partially reported to make it look better as well. Okay. Next, moving on, we have the classification assertion, which is the assertion that all transactions have been recorded within the correct accounts in the general ledger. In other words, all classifications are done correctly and nothing was recorded like in the wrong accounts. This may seem a little mundane, but it could cause the company to be taxed incorrectly or just have different write-offs and such whenever that time comes. Next, we have the cutoff assertion. This is the assertion that all transactions recorded within the correct reporting period. In other words, this is just like say an assertion, say a asset has like a or transaction has a cutoff date, then they can't be reported beyond this cutoff date. That's essentially all it means. Um, Moving on. Next, we have the valuation assertion. This is the assertion that all asset, liability, and equity balances have been recorded at their proper valuations. Say a company has a large piece of equipment that is valued at like $500,000. This assertion pretty much states that this asset would be recorded on the books at this value and nothing else, and then in next year it would be adjusted on the general ledger for any depreciation that would have occurred and everything else, so it's at the proper valuation still. Um, Next, we have the presentation assertion, which is all of the information presented in the statement is presented in a fair and clear manner that facilitates ease of understanding the information contained in the statement. This is pretty broad and basic assertion. It's essentially just saying that all information is presented to the auditor or the team of auditors accurately and fairly, and not aimed to mislead the auditors in any way or make their job any more difficult. And last, we have the disclosure assertion. This is the assertion that all appropriate information and disclosures regarding the company's financial statement are included in the statement. This is another pretty basic assertion that pretty much means that if an auditor or team of auditors asks for a specific bit of information, then you give it to them and do not attempt to hide the numbers in any info in any way. Um, kind of have a good idea about this because I work at Michter's Distillery on their accounting team, and we recently had our sales and use tax audit, and they were asking for more and more invoices every time and wanted us to pull everything and get it all into a different document. So I was in charge of that pretty much. When it all was said and done, they came back to us and told us we were pretty compliant and everything else, and it was a pretty good feeling. Um, it was just pretty much that we don't try to hide anything when we were disclosing it.